Apple has a plan and a promise to make Apple carbon neutral. Wait, no, we've already done that. To make every single Apple product carbon neutral by 2030. Even yours. We're working to make every iPhone, iPad, watch, and Mac with 100% recycled or renewable materials. We're finding new ways to extract aluminum, steel, tin, tungsten, and plastic from recycled Apple products. We're growing enough trees and recycling enough paper to sustain all our packaging. But we can do much more. It's not just what goes into our products, it's also how they're made. Hundreds of manufacturers, distributors, testers, assemblers, disassemblers, and material makers all upgrading to 100% renewable energy. A lot of them are even going zero waste. But it's still not enough. Manufacturing is just a part of it. What about all of you? This is a big one. Apple devices are all over the world, and by 2030, all of the electricity charging all of your devices will be 100% renewable. So you're a part of this too. Because Apple is going carbon neutral. No, everything Apple is going carbon neutral. Apple has a plan.
Imagine a world where technology whispers to your touch, where the design dances with function and every tap unlocks a universe of possibilities. This is the world of Apple. Born in 1976, Apple wasn't just another tech company. It was a revolution. From the sleek lines of iPhone to the intuitive magic of the iPad, Apple crafted devices that became an extension of ourselves and not just gadgets gathering dust. But Apple is not just her hardware. They are built seamlessly where your music, your photos, and your life all flow effortlessly. Apple as a global powerhouse dominates developed markets but eyes untapped potential in emerging economies where growing middle classes. Furthermore, Apple has innovative engine by always evolving, pushing boundaries and shaping the future of technology.
And I will be presenting about exchange rate analysis and risk. As we know, Apple operates in a worldwide market. Being exposed to foreign currencies causes exchange rate risk. Exchange rates have the potential to severely affect the company's financial performance. One of the risks is exchange rate value. For example, the relative strength of the euro against the US dollar poses a risk, potentially lowering the value of Apple's euro-denominated income when converted back to USD. The next example is the Chinese yuan has also been declining against the USD, which also impacts the Apple's earnings. Next is political instability. Political instability within the Eurozone, particularly in context of ongoing concerns such as the Brexit issue that happened in 2016, might also increase these risk factors. For example, the trade and tariff, Brexit, or the United Kingdom's decision to leave the European Union has impacted trade relations. Lastly is the global economic risk. When the economy of the country is declining, it will affect the Apple's earnings. For example, China economy is declining, which impacts the Apple's earnings because China is one of the biggest contributors to Apple revenue.
Risk, whether detrimental or beneficial, plays a crucial role in influencing organizational performance and initiative. Bloom and Milkovich, 1995, assert that business risk significantly impacts organizational strategies. The potential exposure to unexpected financial and non-financial damage due to management shortcoming poses challenge, but also offers opportunities for corporate growth. Apple, as a high-end brand, faces substantial market risk, especially in competitive and rapidly evolving markets marked by frequent product debuts and technological breakthroughs. There are three types of risk, which is transaction risk, translation risk, and economic risk. Transaction risk in international transactions. Transaction risks arising from exchange rate fluctuation during the time lag between contracting and settling a deal affects Apple's financial performance in international transactions. Managing this risk is vital to ensuring consistent financial performance amidst global economic dynamics. The company must carefully monitor exchange rates to anticipate potential impacts on expenses and competitiveness in foreign markets. Translation risks in global operations. Apple faces translation risk due to its global operations and revenue earned abroad. Currency fluctuations impact the valuation of assets, manufacturing costs, and operational expenses in different countries. The company must navigate these challenges by employing hedging methods and considering global economic conditions to maintain competitiveness and stock price. Economic risk and counterfeit products. Economic risk, specifically exposure to exchange rate swings, poses a considerable challenge for Apple. Geopolitical instability and government regulations contribute to this risk. The prevalence of counterfeit Apple products in the market, often sold at lower price, poses a threat to the company's success. Addressing this risk requires stringent monitoring of the supply chain, establishing distinctive trademarks, and educating consumers about product authenticity.
Presenting about hedging strategy. Hedging is like that net for your investment. It's a strategy that involves opening multiple positions at the same time with a goal of balancing out potential losses and gains. You use the profit from one position to offset the losses on another, creating a safety net for your portfolio. You can choose two financial instruments that move in opposite direction. When one goes down, the other goes up, cancelling out the losses and protecting your overall investment. Usually, hedging is used by the traders. They capitalize on market volatility by profiting from price saving, and hedging helps them minimize the risk. Next is a big investor also use this hedging strategy. They manage large portfolio and need to protect their clients' money from market fluctuation. Hedging is used for reduced risk, which is minimize potential losses, giving you peace of mind and confidence in your investment. Apart from that, they are also used by portfolio stability to maintain stable portfolio value during turbulent market conditions. Finally, hedging is a valuable strategy for any investor who wants to navigate the uncertainty of the financial market. By understanding its principles and applying them truthfully, you can build a more resilient and profitable portfolio for a long term. That's all from me. Thank you.
Apple's capital structure has evolved as its debt-to-equity ratio has increased from 0.3 in 2014 to 1.2 in 2019. Extra debt has been utilized to buy back shares, boost profitability, and expand the business. Apple has 125.48 billion in account receivable and commercial paper debt. It had 106.62 billion in long-term debt in 2021. Apple's global growth depends on exchange rate risk management. Due to its good credit and cash reserve, the corporation may borrow money at reasonable rates. Apple's interest coverage ratio has decreased as interest rates have risen, but it's still manageable. This affects global growth in, firstly, financial flexibility. Apple has little debt and a lot of cash, giving its global growth potential. It can enter new markets, buy vital assets, and adapt to economic changes. Second, reduce risk. The conservative loan structure reduces financial risk from foreign exchange rate movement and market downturns. This keeps things stable and lucrative even when the global economy struggles. Third, strategic acquisition. Apple may buy promising companies in new markets, due to its cash reserve. This boosts growth and market share. Fourth, currency hedging. Apple hedged its global exchange rate risk with foreign exchange options and currency swaps. This prevents currency fluctuations from affecting revenue and profits. Fifth, maintaining brand image. Apple carefully managed its capital structure to maintain its luxury brand image. Its global reputation as a reliable and trustworthy company is strengthened by avoiding debt and also keeping financially stable. Apple's capital structure has altered significantly in recent years. The corporation has excellent liquidity and a rising debt-to-equity ratio. The company has managed its debt successfully, but to ensure global expansion, it must monitor its interest coverage ratio and maintain a healthy debt-equity mix. Apple uses currency options, swaps, and foreign debt. This allows Apple to lock in currency rates for future deals, convert cash flows between currencies, and receive money from several sources. Apple's global expansion has been driven by its capital structure, which comprises debt, equity, and financial instruments. The company has been managing its debt efficiently, but to ensure worldwide expansion, it must monitor its interest coverage ratio and maintain a strong debt-equity mix. Apple has lowered risks, created possibilities, and established its global leadership by focusing on financial stability, maintaining a lot of money, and employing financial tools judiciously. The company's financial approach can help other multinational tech companies succeed abroad. Based on the analysis, here are some specific recommendations for Apple in terms of worldwide expansion while managing currency risk. First, Apple should maintain its cautious debt-to-equity ratio. A low debt-to-equity ratio of 1.01 ensures financial stability and limits risk, especially in a weak economy. This ratio is essential for long-term success and client trust. Second, Apple should always have lots of cash. Apple has more than $270 billion in cash, giving it financial freedom for strategic investment, deals, and globalization-related issues. The cash balance facilitates market fluctuations and opportunities. Third, Apple uses two-class shares. This method protects Apple's long-term goal from current issues. Management can focus on long-term growth and innovation. It protects the corporation against activist investors that prioritize short-term rewards over long-term profitability. Fourth, they should improve currency security. Apple should continue to use a mix of forward and option contracts to reduce the foreign exchange risk of legally binding transactions, cash flow forecasting, and net investments in overseas companies. With $176.2 billion in notional FX options in 2021, the corporation hedged 80% of FX. This approach reduces currency fluctuations' financial impact on the business. Apple should hold money in multiple currencies to avoid currency fluctuation. A multi-pronged currency hedging approach gives you more exchange rate risk, control, and protection. Fifth, funding improvement. Apple should monitor its interest coverage ratio to stay competitive. The corporation should issue more debt or stock to adjust its capital structure and promote global growth while controlling exchange rate concerns. This would maintain debt equity equilibrium. 6. Money management. Apple should monitor the market and adjust its money management as needed. Apple upped its foreign exchange wages in 2021 because it expected a higher dollar would affect its 2022 earnings. This proactive cash management strategy can preserve Apple's finances if its currency fluctuates. 7. Altering things. Apple should extend into new markets and offer market-specific products to make more money as it grows globally. If the company diversifies, currency fluctuations might affect sales and earnings. To deal with currency rate concerns while expanding globally, Apple should use a variety of risk reduction measures, adjust its financial structure as needed, monitor market movement, and find new ways to make money.
In conclusion, there are a few key findings. Firstly, Apple's global reach. A master of design, integration, and ecosystem building, Apple has conquered developed markets and now sets its sights on emerging ones. Secondly, new frontier, new risks. These markets like Europe, China, and India offer immense potential but comes with complex economic and geopolitical landscapes that impacts Apple's bottom line, particularly through exchange rate fluctuations. Thirdly, the cost of a risk. Navigating this risk depends on effective risk management strategy like currency hedging, financial flexibility, and robust capital structure. Thus, Apple should migrate the risk. Apple should maintain a conservative debt to equity ratio and strategically managing its debt. Apple should sharpen the tool by employing hedging strategy and adapting the capital structure to strengthen Apple's financial against currency volatile. Furthermore, Apple is encouraged to embrace the future. Continued innovation and smart acquisition will ensure Apple's long-term impact, but they must be balanced with a mindful approach of managing exchange rate risk. In conclusion, Apple's global feast is a testament to innovation and adaptability. But to truly savor the future, it must be mindful of the risks on its plate.